Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's available to you there. Anytime, any place is the idea. Just subscribe. You'll get notification when content is pushed, and it makes it a lot easier for you to keep up with what's going on here at TA Today. As far as these markets, it was another volatile day, as we had the indexes mostly end higher. We had the Russell down, but everything else was up. But that was after, big up, big down. If you look at the ranges, for example, you had a 24 and a half point range on the S&P. Big ranges. And in matter of fact, it was bigger than that. If you look at what was happening before the market opened, it was up almost 10 before that. So big ranges, bonds up big again, dollar up strong again, oil clocked again, as well as the natural gas. We had silver and gold spiking again. Folks, this is not your normal scenario. In other words, the volatility this high is typically not what you see, and usually this kind of volatility is not what you want to see if you're bullish. Let's go to the charts and look at how they are shaping up here. I've been watching this big bar. I've talked about it before. It's still the bar of interest in my mind, and it's the top and bottom of that bar that keeps me interested. And you can see right here, we're coming right back up into it. We sneaked into it on Friday. We're back into it today on Tuesday. You can see there's no volume. I suspect it's going to be even less volume tomorrow as we get ready for the ECB on Thursday morning. But what's most interesting to me is that these markets, despite all this imaginable stuff that's been thrown at them, these markets continue to trade at highs or near the highs in almost all markets, with the exception of those that are getting killed by the currency wars that are going on, or those that are tightly coupled to commodities. If I just go down a litany of the problems that are out here and the issues that we have, earnings. Earnings aren't being bought, and if we get a chance, we'll look at a few of those, but for the most part, they continue to be sold. I see news out of Ukraine again saying Russia is invading. The central banks, as I just mentioned, outright currency wars. Global economic expectations cut again. Commodities are just getting slaughtered, and we're not talking about just, oil. I mean, look at, say, DVA, for example. This thing just keeps falling into no man's land. If I put this on a monthly, you can see the kind of damage that's been done. It's all the way back at the lows. So, it's not just commodities. It's across, it's not just oil. It's across the whole commodity pit, with the exception of gold and silver, which, to many's surprise, are going the other way, right? Here's the monthly on gold. Bring it in on the weekly. You can see it skies rockets over that swing point high on Friday. Just continues to extend. It's going after this next swing point high. I suspect that's probably we're going to see some sort of a pullback, but a rocket shot back to the top side on gold and also on silver. Both of them making their move. Silver gets over the swing point high today, and everything outside of that in the commodities market getting killed. Bonds near their highs. If I pull up a bond, put it on a daily, you can see they're up here pushing the highs again. And this is with the Fed's mouthpiece, Hilsenbrock, telling us that the Fed is going to hike rates in mid-year. And what does that mean? Well, that means that the dollar is going to probably continue to head higher, or at least hang at these highs, That means there's going to be earnings pressure. That's why all these earnings are getting, I've seen note after note after note where the dollar is killing the earnings. You know, the foreign exchange component of the earnings. That also is going to mean that stocks are not going to be bought back with as much reckless abandon as they have been to engineer those earning, you know, price per earnings higher. Yet despite all these things I'm talking about, where's the S&P? It's almost at the highs. I mean, I'm not sure what the percentage is here, but it's not that far off. 2093, we're sitting at 2031, so we're 60 points off, 3%. 3% off the highs, and the list of problems just continues to grow. But it doesn't matter. And it doesn't matter here. It doesn't matter overseas. You know, if I look at almost any of the overseas markets, and I'll just pop a couple of them up, look at India, going for the highs. Look at France, over the recent highs, the swing point. The DAX at highs. Even London, which is metal related, is going after a swing point high. If I stay away from anything that's commodity related, you know, they're all at highs or going after highs, one after another, right across the board. It's a strange world. We got negative interest rates across Europe. You know, if you park your money in bonds, you're not going to get anything for them. If you put your money in the bank in some countries, it's negative interest rates. It is an upside down world, folks. And it's all based on central banks and their complete disregard for any kind of a sane action on their part. Instead, we continue to get pump after pump after pump with easing, quantitative easing, one after another. And frankly, I don't know where it ends. And although I'm not going to fight it, I can tell you when the volatility is this high, the risks are just as high. It's no different. Let's take a look at some of these sectors. I want to pop in real quickly and just show you some of these sectors are just screaming still. You know, risk on sectors like the IBB still making highs. Airlines had a good day today off of earnings, got a little pop in the airline sector. The XLE, with oil dropping like it did not want to fall. That's an interesting divergence continuing. XLF could not get going today, ended down on the day. Those stocks continue to get sold. Morgan Stanley was the most recent one. It was down today to report earnings. The big one tomorrow is going to be AXP after the bell. They've sold off with everything else. They're set up to try to get a bounce, and it'd be curious to see how they trade because they're one of the stronger ones in the group. Visa is another one that will be coming out a little bit later on. They're still holding near the highs. And if I just take a quick rundown of some of these earnings today and what they did, let me pop up that. Let's do with some of the oil stocks, because I had told you coming in earnings season, if I had to gamble anywhere, I would have gambled on oil. Here's BHI, Baker Hughes. They get a nice little pop today. Halliburton, one of the most hated stocks, even gets a decent bounce. We looked at what was this, Schlumberger, I think, had already got its pop up last week on its earnings. If we move over to a different sector, we got decent earnings tonight out of Cree. That one gets a nice pop after the bell. Another one is Netflix that's going to get a nice pop tomorrow. This one was trading up quite a bit. 404 was the price after the bell. That takes it all the way back up here over the highs. If we put it on a weekly, let's see what this actually looks like. Going to take it back up to test the breakdown bar. So huge trading range. It's just spiking back the other way now. If we go and look at some of the losers today, iGate, this is not one of the big ones, but this one got smacked pretty hard. That's a computer manufacturer. Let's look at another one. How J&J got hit again today, and that one makes new lows. Breaks the lows last week, extends those lows on volume today. There's a lot of damage out here and continues to be. Another one after the bell got hit was IBM. This has got to be one of the worst stocks around, in my opinion. They've been manufacturing their price points for, their earnings for something like 2.5 years now that I've been watching them. And they're if you pull this back, I think they got up around 200 if I remember, 197, 199. They got to 199. They got the big drop here, and they come out with bad earnings again. They're not going anywhere. They're 25% off their highs already. Is that enough to make them worth buying? Yeah, I'm glancing here to see. Yeah, they're probably going to hold this range because they had a nice spike up off the volume here. They'll probably hold this 153 area. So they're not going to kill the market. Tomorrow you got some more earnings. So ones I'll be watching in the morning, AMTD. That will be one to give us a good sense of more on the brokerage stocks. So far they're getting hit as well. And eBay. Yeah, it doesn't look like eBay is going to go anywhere either. So, it's not. Earnings are just simply not being bought, and they can't manufacture those numbers quite as easily with the dollar at highs. You don't have increased sales in most of these companies. So the way they've been doing it is through, consistently manufacturing the price per earnings share by buying back their shares on borrowed dollars with no interest rates. I mean, that's where the bulk of these large companies have made their money. And will it continue? Well, if that dollar doesn't come down, I don't know that it's going to continue. And if the Fed's going to actually raise rates, I don't know that it's going to continue. So that's the jeopardy situation they're in right now. As far as what we can expect tomorrow, you've got essentially probably another hang day. I can't see these markets selling off in any big way in front of the ECB. Likewise, I don't think you're going to see these markets rally very much in front of the ECB. I think you're going to see them thrash back and forth just like they've been doing. And then Thursday, it's all the fireworks. We're going to get the Big Bang Theory. We'll see if Draghi delivers and just how much he delivers, and that really is going to be the issue: is how much. It's a foregone collusion. It's a foregone point now that he is going to deliver. It's just a question of how much is he going to deliver. Let me take a quick look at the Russell. Yeah, I didn't do anything either. So. All right, I wanted to spend just a little bit of time showing you the subsectors. I always, or not always, but most of the time I'm focused on the major sectors. But the subsectors are interesting to watch as well. Gold we already talked about. Here's the breakout on the gold shares. That's another ABCD structure on the way up. Looks like it can carry a bit more. But then I want to go to some of these that are having problems, like the broker-dealers. They break 3 swing point lows. That gives you the continuation, 2 to 3 bars. Now they're trying to get a little bounce back up. If you look at them on a weekly, they've already broken on the weekly, right? The swing point high. So the broker-dealers look as bad as the banks, right? If we look at the global financials, the global financials are pretty much broken as well. You can see it here on the daily, and you can see them trading towards the low end of the range on the weekly. If we move over to insurance, insurance is taking it on the noggin as well. Coming back, breaking a swing point high on a retest, bullish retest regen on the weekly. If we look at the regional banking, right? Regional banking also getting hit. So there's a certain theme here in that anything related to the financials is not a place you want to be, and you can see it over and over again. If I move over to let's go to the stills making lows, right? This sector's been crushed. Social media, same thing, down near the lows on the daily, on the weekly. there is sector after sector, the ones that we don't see on a day-to-day basis. Here's TAN, right? The solar stocks. The stocks we don't see on a daily basis because we don't watch them quite as close because they don't have as much impact on the general markets. But folks, make no mistake, there's a lot of, on these, there's a lot of issues underneath the covers. Yeah, there's a few of these that still look okay. If I look at the agribusiness, it's not quite as bad. If I look at the food and beverage, that one's not so bad. But if I look at most of those others, not looking so good. I haven't looked at this one in a while. Let's see what the aerospace defense, that one's holding up all right. Fight enough wars, I guess that always stays pretty good. Real estate has been good, so that's still doing well. So you have some of these subsectors doing well, but a lot of them struggling near their lows. If we see that continued struggle, right? I mean, I've talked about this many times before. I'll just repeat it one more time for those of you who might be new. If you think about stocks and you take this as stocks, the stocks move subsectors, subsectors move sectors, sectors move the general market. So if I have the general market in an uptrend, which it is, and if I have the sectors in uptrends, which they are, but I have the subsectors doing this, and I have stocks doing this or this, depending on which ones you're looking at, eventually that's going to cause problems here. It's going to cause problems with the sectors. And if the sectors have problems, that's going to eventually cause problems with the general market. That's just the way it works. It's a bottoms-up approach. It always works that way. And then if you think about it in terms of time, right? You have the short-term time frame, right? You have the intermediate-term time frame, and you have the long-term time frame. This is days, weeks, months. Right now, these are like that, and these are like this, trying to go down. The short-term time frame impacts the intermediate. In other words, if this is bearish or sideways long enough, eventually this will do the same thing. If this is bearish or sideways long enough, that eventually will affect this. It has to. It's just the way the market works. And so we're always looking at those things that move the market and the time frames they're moving it on. That's how you tell which way a market really wants to go. I'll leave you with one more thought. I've got a gentleman over in Australia that's been telling me that I should be looking at the at some of these bear ETFs, and one of them is HDGE. It's the equity bear ETF. If I look at it on the daily, you're over the swing point high, pressing up to new highs on this particular time frame. And if we look at it on the weekly time frame, you can see here that it's pressing back for that swing point high back on October. Now October, this was the bottom in the market. You can see it's coming back to try to test that. So far, I don't see the volume build up like I saw back in September, October. But of course, that volume buildup is probably going to take place when there's a real scare, and we don't have it yet. Could it be where we're going with this quantitative easing headline that's hitting us in 2 days? I don't know. I'm not sure that that's what it's going to be. If I had anything, or my guess at anything, I would think that these markets are probably going to try to bounce before they fall. But if they fall, folks, there's nothing underneath them, and that's the real risk if you're out there. If I bring this back and put it on a weekly, you get underneath here, there just isn't much until you get back into that October bar. So if you're trying to weigh the risk, right, the risk is certainly weighted to the downside in terms of the magnitude of the move that probably takes place if in fact this thing breaks to the downside. You break to the upside here, you're just going to go test the highs. You break to the downside, you're coming quite a bit lower. So I would be careful, you know, if you're leaning too far one way or the other. There's a lot of news, there's a lot of volatility right now, and there's a lot of currency issues, and usually currency issues are not where you want to have a lot of exposure in equities, or at least not the time you want to have a lot of exposure in equities. All right, I'm going to leave it at that. One more day, and we'll see what Big Draghi's gotten, you know, up his sleeve, and what it's going to do to these markets. Have a great one. Thanks for joining me. You tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have yourself a great one. I'll see you next time.